Hello guys, welcome to another of my videos during our morning jog here in La Quinta in California, and yeah, we're having a great time. So let me tell you about my strategy and which wines are really good for investment and which ones I feel make the most stable return and the best return. So I keep a very simple strategy. I look at the best wines, or what are probably the most expensive wines in the world, and the wines in France many years ago. In fact, one of the classifications that I look at is called the 1855 classification. You can Google that. That was introduced by Napoleon, and he categorized the wines into first growth, second growth, third growth, fourth growth, fifth growth. And basically it just means that there are certain rules and regulations that these wines must follow. And one of the most important ones is that there is a restriction on the amount of bottles that are produced, or labels that are produced on each vintage each year. So that maintains the demand in that wine, because there's always a limited supply or limited quantity on each vintage each year. So the 1855 classification, what's really good about these categories is that right at the top, when you get into first growth category, there are literally anywhere between 3 to 5, slightly more, in that first growth category. So if you look at first growths, there are not that many wines for you to research, probably 20, 30. Now, sometimes I go below that category, which is second growth, but if you were going to do research of wine on your own, I would just tell you to look at first growths only, stick to that. These wines have been around for hundreds of years. They have a huge market across the world. There is no problem when you sell the wine later on. That's very important. Their growth rate or return is very stable, generally between 7 to 10% per year, and that's pretty good when you're buying an asset. You know, you're owning the wine and it's yours to keep. So you can obviously, there's always a value because you're holding on to an asset. Come on. Now, so let's just look at some of these examples of these first growth wines, and we'll take the 1855 classification as the example. And so you've got Chateau Margaux, Chateau Haut-Brion, Chateau Latour, Chateau Mouton Rothschild, Chateau... Okay, so Mouton, Latour, Haut-Brion, Margaux, and of course the most famous one, which is Chateau Lafite Rothschild. Now, value of these cases of wines is anywhere from around $3,000-$4,000 when they're brand new, vintage, and of course the price can go very high. You can buy one case of 1962 Chateau Latour for like $50,000 now. So the prices do vary, of course, depending on the vintage, the rating, what the critics say. Now, and those kind of things is what you look at. You know, this is what I do on a daily basis. I'm a fine wine analyst, and I look at scores, I look at prices, I look at availability in the market, I look at all the analysis, I look at the charts, I look at the historical price of the wine, and then I select. And when I select that wine, I then actually go in and negotiate on the price. So you can tell it's quite easy to find the right wine. It's not that difficult. What is I guess the tricky part is negotiating on the right price, which is what I do. I have a network of negociants and merchants and distributors that I've built up for the last 20 years, and you know, we have a good relationship. There's trust there. So, you know, in terms of getting the right quality of the wine. When you buy it, it makes sure that making sure that the wine is in perfect condition. If you're buying something that's a bit older, perhaps 10 years old, you want to be looking out for that. But when you do the deal, or when you buy the wine from a merchant or distributor, of course you have to make that very clear when you buy it. You have to ask them for photographs of the stock, and that's what we do when we buy wines in. We take a photograph of every single case of wine that we buy or invest, and bring it into our warehouse so that we know the quality is there, or the condition. So that's basically it. Now, there are other categories in fine wine that you can look at investing into. There's the 1855 classification that I mentioned. Do have a look at that online. That's really easy to look at and analyze. Just 5 wines in the first growth. You could invest in second growths if your budget doesn't allow you to buy a case of wine for $4,000 or $5,000. You want to invest in maybe something for $2,000, then you would look at maybe a second growth wine, which is the same classification. Then you have the Saint-Emilion classification, which is also a Bordeaux classification, and again that just has a few wines in its class. And so there are various classifications that you can look up. We actually list all the top classifications in France on our website. They're all there. Each wine is listed, and so you can have a look at that. It's free information that you can just search classifications on our website, which is investintowines.com. And then, of course, there are other types of wines that you can invest into. So wines like wines from the region of Burgundy. These tend to be very expensive per case because the production of them per chateau or per wine grower is very, very low. You could be looking at just 1,000 or 2,000 cases of that wine that's produced on a particular vintage. So that's why the price is very, very high. And I tend not to buy too many Burgundies because the per case value is a lot higher. So go in front. Go in front. So that's why I tend to not buy Burgundy. Then of course you have other wines like wines from Rhone Valley, which are also from France. You have Champagne, of course, which is from France. So I invest in these also, not as much in my portfolio. Mainly, most of my portfolio is made up of Bordeaux, and most of it is either first or second growth. And then you have New World wines, which are wines like from California, wines from Australia, Italy, Spain, some of the top wines that they make, which you would consider for investment. And they are good wines. But they don't have the classifications, and they don't have the restrictions on the numbers of bottles or labels that they produce each year for each vintage. And this is very important because it's harder to then keep a track or know how much demand there would be on that vintage based on how much quantity was produced. Okay? So that's it really. You can send me any questions you like. I'm here in California with our new wine investment office, and we are loving it here. It's a beautiful place. And if you have anything to ask me, don't hesitate. So thanks for watching.